Hey, good morning, everyone. Paul McMann here with Forex Smart Trade. So glad you could be with us this Thursday morning, May 27th, the weekend before Labor Day, Memorial Day. At Forex Smart Trade, our mission is to help you become the best version of yourself. And we do that by helping you become financially independent, by teaching you how to currency trade using our proprietary trading tools and our best in business one-on-one training. We are so confident in how well our tools work and our ability to train you that we provide a guarantee. And that guarantee is that once you've been trained, we will let you trade company money and split what you make, with eventually having the opportunity to trade $100,000 of company funds and keeping 80% of that. So with that, let's get going today. In this session, actually, let me step back. Next week, just as a little housekeeping, next week I am traveling, so there will be no live trades in the morning. Next week I'm traveling, there'll be no live trades in the morning, and the likelihood is there'll be no, I won't be sending out evening trades. If I have the opportunity to take a look at the end of the day and put together a trade, I will, but the likelihood is I won't. Just so that you know that. In this trade, I focus, I use two of the dozen or so signals that the indicators provide. And that is one trade called the 10-point trade. And the other is something called the thick orange line trade. So with that, let's get going. And we will start with, we got to listen to this guy. This guy's a little bit of a downer, but let's go.
Due to federal and state regulations, we are providing the following disclosure. Please stay tuned, as this will take less than a minute. Foreign exchange, futures, and cryptocurrency trading are highly risky, and you can lose all the money you invest should you decide to engage in live trading. We are not responsible for your investment, trading, or tax decisions. We are not licensed financial advisors, traders, accountants, stockbrokers, or attorneys. We are not licensed commodities brokers and do not engage in or facilitate commodities transactions. We are not an introducing broker, and we make no recommendations to where you should invest or what broker you should trade with. As you apply what you learn, we recommend you seek advice from licensed professionals. Any trade results that we show should not be considered typical of our students. We do not and cannot track the results or performance of our students' private trading accounts. We do not know what a typical or average student earns or loses trading. This is not a get-rich-quick program, guaranteed system, or business opportunity. We sell training and trading tools. We make no promises our training or tools will generate future income for students, and you may not make your investment back, including your investment in this training. Any redistribution or recording of this material is strictly prohibited without advance written permission.
All right, that guy's gone. I'm a firm believer that if you believe you can or you believe you can't, you will be right either way. And I certainly believe I can. And I believe you can too. So, but again, it is risky. So we have to use caution, and we will teach you good risk and money management techniques so that you do well. We have a schedule of live trades. The yellow is for lights, the green is for regular members, and the purple is for regular members. Until you're consistently doing 10 pips a day, I would attend as many of these as you can. Gives you an opportunity, one, to ask questions, two, to see watch another trader who is good at what they do and see if you can pick up things from them. So here's a schedule. Attend as many as you can. The other item is that I work off of a kind of a little checklist. I start by first checking that my charts are live and connected. Now, those of you using Green Charts 2, I'm still using Green Charts 1. Green Charts 1 is a computer-based program, whereas Green Charts 2 is the web-based version. I am familiarizing myself with the web-based version. There's a couple things that are a little bit different and some things that I don't want to have to redo. For example, I've spent a lot of time figuring out my support and resistance. So I don't like to, I'm not looking forward to recreating that. Back to our, so I know our chart is live because I've got the green box up here. And I have the green box down here on the green charts too. Since it's web-based, you are live. I also like to check the CoinEx, and I see these numbers moving over here on the left, so I know that we are connected to the internet. Like to review yesterday's trade. It's a good habit. If you've made bad trades during the day, to go back, take a look, and figure out what you did wrong. We get better by taking corrective action when we go a little bit off course. So by making a bad trade, you went off course. So what was it that caused you to go off course? Last week or earlier this week, we took 2 trades on the Tuesday morning trade. Both closed. One was a thick orange line trade, and one was a 10-point trade. Both closed. The other example I've got in here was I was showing somebody how to hedge. But if you can, I would encourage you to take a screenshot when you take the trade so that you can remember. You can scroll back, but I find that's a little bit harder to do. We are technical traders. As technical traders, we want to, so it's strictly price action based. The other way you can trade is what they call fundamental analysis, which is based on news and information. We don't trade that way. But we do want to know what the news is so that we can trade around it. And where we go to get the news is we go to a place called Forex Factory. There are a couple different places you can get news. And it gives a feed that's specifically related to currency. And it breaks down news into 3 types of news: low impact, which are yellow flags, folders; medium impact, which is orange folders; and high impact, which is red folders. And today at 8:30, we've got GDP numbers coming out and unemployment claims. So we've got a red and an orange together on the US dollar. It is 6:30 now. I'd like to be out of any trade carrying that currency 2 hours beforehand. So the likelihood is we will not take a USD trade this morning. I will analyze the USD pairs just so that you can understand my analysis, but we probably won't take a USD trade because I don't want to get stuck. So with that, let's go ahead and start our analysis. And our analysis, once I get the initial signal, then I'm going to look at the trend, the support and resistance in the channel. But the first step is to figure out the signal. And on the in the first signal we're going to use is the 10-point signal. So on the 10-point signal, what we want to do is we want to get as many of the lines going in the same direction as possible. And when we get at least 7 out of 10, we have a good trade, or the possibility of a good trade. So I start with this chart that we're looking at right now is what I call a composite chart. It has 6 different currency pairs, all on a 1-hour time chart. So that means each candle has 1 hour's worth of information in it. You can trade on a chart that goes from 1 minute out to a month. The signal works the same either way. It just takes longer or shorter for the move to happen based on the chart you're trading off of. So we're going to start off with a 60-minute chart. I start with the middle chart, which we call the majors and the minors. The red and green are major signals. The black and gray are minor signals. I want them to either be oversold, which means that the lines are below the red line, or overbought. Over here on the dollar Swiss franc, they're overbought. And then I am looking for a situation where all the lines are pointing up, like I have here on the USD, AUD USD. And I've got a crossover or a double crossover where the green line's coming over the red and the gray line's coming over the black. So I have 3 points here. First point is that we're oversold. Second point is the lines are moving up. Third point is that it's double cross. I find it an even stronger signal when all the lines are kind of close together. These are kind of close together. They could be right on top of each other, and they'd be more close together. So when I have all three here, I jump up to the top chart, which we call the TNTs, and there are 4 different lines here. The 2 orange lines, thick orange and thin orange, and the 2 blue lines, thick blue and dotted blue. Each of these lines captures information at a slightly different speed, with the thick orange being the fastest and the thick blue being the slowest. The 2 orange lines are going up. That's consistent with what I'm seeing down here. And the blue lines, the way they measure things, they're inversely related. So what that means is that when blue line is going down, that means up. So here the dotted blue is going down, so that means up. And the thick blue is going up, which means down. So I've got 3 of the 4 lines here telling me that we have a buy signal. I want to have a minimum of 3 out of 4. Again, to get that high accuracy, and to be a good trader, you need to have a high accuracy rate. My accuracy rate's a little over 80%. We want to have as much information or as many different signals telling us it's a good trade to take that trade. So I've got confirmation here on the TNTs that we've got a buy trade. And then I look down to the pressure, which is the third element, and I want to either have the lines pointing up as they are here, or if the lines are pointing down, I want to have the green line on top, which would support an up movement. Right now, I've got the lines pointing up. Again, the closer and tighter these lines are, the stronger the signal. So this signal, we've got a gap here, is less strong than this signal where the lines are close together, or this signal here on the GDP USD where the lines are together. And the GDP USD line is a stronger signal because the lines are going up and the green is on top. So that's kind of worth 2 points versus 1 point here. But our problem over here on the GDP USD is we're already through the channel. So the move has already happened. Here we're catching it right as on the Australian USD, we're catching it right as it goes into the channel. On the euro dollar, we're catching it, it's not quite halfway, or at least the majors aren't quite halfway. And that's what I'm paying attention to, is what the majors are doing. And when there's a disagreement between what the majors and minors are doing, I'm paying a little bit more attention to what the majors are telling me. So this is still a viable trade. But here I've got 3 points here, 3 points with the TNTs, and 1 point with the pressure. So I've got 7 points. That's a good trade. The problem is it's the USD, and we have news within the next 2 hours. So I don't really want to take the trade here, but I like this trade. Now, if I were to take the trade, what I would do is I would open up a full AUD USD chart, and I am going to do that. I'm going to do that by just taking an existing chart and change the time, change the symbol. So I'm going to go to, oops, come on, AUD USD, apply. It's going to adjust all of my charts. And what I'm doing, we go back to my my notes, my checklist. Next thing I do once I have the signal is I want to kind of do this analysis. I want to find where the support and resistance are. I want to find what the trend is, what the channels are. So let's go ahead and do this. So I'm going to open up this guy, and you'll notice I'm going to crunch it up just a little bit more so we can draw some support and resistance on here. Support and resistance are spots where the lines tend to bounce. And right now this chart's got 90 days worth of information. I'm going to put my glasses on so I can see it a little better. Where the lines, the candles naturally seem to stop. And that's going to set our boundaries on what we think we can get. So right here, it bounces here. It bounces a little bit in here. It bounces in here, over here. Like right in here a little bit, right in here. So that's a good line. Let us find the next one. Right in here, right in here, in here, right in here, right in here, here a little bit, right here, over here. On the USD, these on a 1 hour chart, the lines tend to be about 30 or 40 pips apart. So if I look here, I'm at 32 and I went up to 60. So that's 28 pips. Let's get one more above and one more below. So we stopped here, here, and here, here, here. That's a little less than 30. That's 23, and we're going to get one below it. Right in here, right in here, right in here, here. All right, so we've got our support and resistance. Now, what is the trend here? I don't really see much of a trend. We're going up a little bit. We're going up a little bit. And we're going down a little bit. And going up a little bit. Come down a little bit, and it's basically stayed within, for the last week, it's been trading within this channel. So it's going up a little, going down a little. So there's no clear trend. Reason I want to know the trend is that's going to decide how many pips I want to take. Because if I'm taking a buy into an uptrend, I'm going to take a little bit more. Versus if I'm taking a sell into an uptrend, I'm going to take a little bit less. So right now we're stuck in this channel, and I'm going to again bring this up a little bit so I can see it a little better. I want to know how much room I have to the two resistance spots. Oops. So here, going up, I've got 11 pips. Going down, I've got 15 pips. So I've got 11 pips up, 15 pips down. Since I'm trading off of an hour chart, that is going to be the limit. That's going to be the limit of how many pips I take. I'm not going to take more than 11 up or 15 down. Now let's go back, take a look at the signal. So here's the 1 hour chart. Everybody's up here. I got 3 out of 4 here, and I've got up pressure here. On the AUD USD, on the 2 hour chart, I've got conflicting signals here. I am overbought, whereas I'm oversold here. I'm overbought. Ideally, I want this to be oversold too. and I want the 2-hour chart to be oversold too. So I don't have that here. I've got strong up pressure on the majors, but it's approaching the end of the channel. The minors have kind of softened up, and then here we got to push up. Now the question is, can we get 8 pips maybe, 8 to 10 pips on this up move? I don't like this as much. I prefer to see this down here. I prefer on the 4-hour chart, we can maybe get away because we've got the strong up move. I've got on the pressure, I've kind of got down pressure, but the green line is going up. Here I've got a big gap, which tends to mean retracement. Retracement means that the current candle is going to copy what the last candle did, or reapply what the last candle is, and we can see it's already done that. This candle matches kind of this candle. But I do, again, even though it's got the gap, I've got the green on top and the green line is going up. So I'm seeing buy, and I'm getting support on the pressure. But this morning, we're not going to take that. I'm not going to take the trade because it's within 2 hours of when that news is coming out. So even though I kind of like the trade, I've kind of got the signal here, I'm not going to take the trade because, I'm not going to take the trade because we're within the time frame. Let's see, we'll go to a non-US pair and see if we can find a signal. AUD US, AUD USD. So this first chart has primarily, so you saw the analysis, but let's see if we can find one where we can take a trade. Probably should have done this first. These are non-US pairs, Euro Pound. I got everybody going up. These lines are nice and tight. They're not quite halfway. So this is 3 points. 1 that they're oversold, 2 that everybody's going up, and 3 that I got the double cross. 2 oranges are going up here. Dotted blue coming down. So that's 3 points here. 3. What's the problem here? I've got kind of sideways pressure with red on top. I want to have green on top or have it going up. Green is going flat. Maybe, well, not even maybe. I'm just, I don't have it. I want to have either green on top or the lines going up. I don't have that. So I'm going to pass. But this part is good. This part is good. Here we're more than halfway on the AUD JPY. Canadian, Euro, Canadian. Oversold. Everybody's going up. I got the double cross, but what don't I like here? I don't like that the slope of the line, the green line, has changed. Here it's more steep. Here it's less steep. This little kink in the line makes it so that I don't like this as much. So I am going to stay away from it. The other reason I'm going to stay away from it, I've got actually 4 points up here. I got strong down pressure. Green has not crossed over red yet. If green crossed over red, this trade might be good in an hour. Right now, red is on top with down pressure. When this crosses over, I will have 8 points. But right now, it's not ready. I don't need to take the trade. AUD, NZD, oversold, going down, nothing. This is a USD pair. EUR, AUD, overbought and going, majors are still going up. Let's go to the next group. AUD Canadian, oversold. I don't have the double cross here yet. Not quite. The majors aren't quite going up, so I'm going to pass. Swiss franc yen, oversold. Everybody's going up. And the double cross, 3 points. 2 lines, 2 orange lines going up, dotted blue coming down, 3 points. And I got the gap here. It's kind of sideways, downward, sideways pressure with red on top. Pressure's not helping me out here. Again, I don't need to take a trade. I only need 2 or 3 trades a day to do well. So if I don't have it, I'm not taking it. And you can see I can go through these quickly. We're going to the other side of the channel, so nothing there. Reason I don't want to take a trade here, I've got, everybody's going up. I got these guys telling me up. I got strong up pressure with green on top. I don't know how many pips it's worth. I'd rather catch something down below and have it ride all the way up than I would, catching it on the over bought side. So, for example, had I been able to catch when we get the crossover here, I could have run this for 26 pips, even more, 32, and then cut it off when it started to come down, catching this run. So here, overbought, starting to come down. We still don't have the crossover yet. NCD, CHF, overbought, going sideways, nothing there. Canadian, Swiss franc, overbought. Minors are coming down. Majors aren't there yet. So nothing. We did have some signals on the U.S., but we're not going to trade the U.S. Why? Because we've got some news coming out. So now I'm going to go to, we got 3 minutes left in the top of the hour. You can see this 3:33. I am going to use the thick orange line trade. Thick orange line trade looks at what this number is. This number is ranges from 0 to minus 100. On the new green charts, it goes from 0 to 10, and it's reversed. On this chart, it's 0 is at the top. On the green charts too, 10 is at the top. But I'm looking for 0 or 10, and then I want to be or within 10 points or 1 point of either end. So I can go from 0 to minus 10, 0 to 1, or 9 to 10. So minus 65 is a no. Minus 40 is a no. Minus 29 is a no. Minus 54 is a no. Minus 62 is a no. 62 is a no. Nothing there. Minus 52 is a no. 63 is a no. 0 is a yes. So I get there's 2 parts to this signal. The first part is when this is 0, or in the case on the new green charts 10, this number is a scaled number. So when this is at 0 or 10, it's telling me it's maxed out. It doesn't believe there's any more up in the movement. So when there's no more up in the movement, that's a good time to sell. I want confirmation of that. And the way I get the confirmation of that is I look to what my majors and minors are doing. So if this is telling me I'm overbought and it's time to sell, I want to see all of these lines way up here. And I don't have that. So I've got part 1, but I don't have part 2. Minus 87 is close to minus 90. If this were just a hair bit more, we might even come back and consider this. I got all the lines down here. What's going to happen is we're going to catch the snap when the hour changes. And this is always good for 5 pips. We're just a hair bit off. Let's see what else we have. Let's see if we have a better trade. Minus 39, no. Minus 22, no. Minus 80, no. 58, no. 35, 26, nothing. So if we go back here, you can see I can go through these very quickly. In 3 minutes, we just looked through 18 charts, or 2 minutes, we just looked through 18 charts. This guy is close. We're going to go ahead and take it. We're going to take a 5 pip buy on the AUD NZD. So I go here, AUD NZD. I'm going to see if I have that chart open. AUD NZD. I don't have that chart open, so I'm going to go to File. Where is it? Open. New chart. AUD NZD. AUD NZD, not in that group. AUD NZD, not in this group. AUD NZD right there. I'm going to open it up. based on there's $10,000 in this account. So I'm going to click new order. My lot size is going to be, I'm going to move the decimal spot over 4. So if I move this decimal spot over 4, I'm going to have a 1.0. So I'm going to do a lot size of 1. I'm not worried about my stop loss and take profit. I just want to get it in. So I'm going to click buy by market, records it, puts it down here. I click anywhere along the line and it brings up this menu, and I'm going to go to modify, and now I'm going to add my stop loss and take profit. This trade is worth 5 pips. So if I put 50 points, that's 5 pips. Click this little blue copy as, it does the math for me. And this trade is good. Wins 90% of the time historically. So we're going to use a 4-to-1 stop loss. So if I'm going for 50 points, which is 5 pips, I'm going to go for 200 points or 20 pips on the stop loss. Only thing I want to do is I want to check, make sure I get my full 5 pips. So if I'm at 1.0606, I'm going to want to go to 1.60611.5. I want to make sure I get my full 5 pips. So this does the math, but as the line is moving, it changes it. So put it in, and there it is. I like to just make sure that I see my stop loss. And on that trade, what some traders like to do is they want to confirm when the hour changes, they want to see this number change by at least 10. So if we go back to the top of the hour, we were at 86. Now I cheated a little bit here because the rule is it needs to be 90, 9 or less. But it was close enough, and I wanted to give you a trade. I think this trade's going to go, so I went ahead and took it. So we're at minus 86. All the lines are oversold, well oversold. And I'm specifically concerned with the majors. So they're way down here, very far from the red line. Now, if I go to current, boom, it bumped to 50. So it changed by 30. All I needed to do was change by 10, and it's a good trade. So we're going to be okay. I'm expecting this trade will close within the next hour to 2 hours. Any questions? No questions? Okay. So today, just to recap, we took a thick orange line trade for 5 pips on the AUD NZD, and that's it. Just a quick reminder: next week there'll be no live trade because I am traveling, but we'll resume when I get back the following week. All right. Gang, thanks for being here. Again, if you need anything, I'm around. Text or call me. Have a great day. Bye-bye.